Hi guys, thanks for joining me back at You've Got This. Let me start over. Hey guys, thanks for joining me back on You've Got This. You've Got This is the channel dedicated to teaching you all the life skills you need to make it in this world. We're on part 2 of our credit series. Maybe you saw part 1 and that was just defining what credit actually is. Today we're going to talk about how you build credit. You know, when you're first starting out, or if you've made some choices or had some tragedies in your life where your credit has gone down, you are going to need to establish good credit. Each person through the course of their lifetime is going to gain what is called a credit score. Your credit score is something that tells a lender how risky you are for them to lend to. And so the higher the credit score, the less risk that they feel they'll take when they make a loan to you. And the lower the credit score, the more risky you look to a lender. Now, how do you get a credit score when you're just starting out and you haven't ever even borrowed money? Because the way you're gonna probably get a credit score is you're probably going to have to borrow money. That could be through a credit card or through taking a loan out. But how are you supposed to do that if you've never done it before? It's kind of like when you go to a job that you're just starting in your field and they want someone with experience. So how are you supposed to ever gain experience and get a job? You know, you're just starting out. So what can typically happen is I think one way to start is to get a credit card and have someone co-sign that credit card with you, a parent or something. You know, sometimes when you go off to college, you'll get credit card applications where they allow a parent to co-sign with you, and what it does is it helps you to start building credit. How are you supposed to get a loan for a house if you've never really established credit before? One of the things lenders can do is they can build a credit history for you. They'll construct a credit history for you by taking rent receipts, showing that you've paid bills in a timely fashion, things like that. So there is the possibility for at least lenders that are making home loans to build credit for you using your past history of maybe being a renter or a bill payer. But typically, in order to start, or what you're going to do is you're going to apply for your very first credit card. Maybe you're not going to get someone to co-sign on that credit card with you, but you're going to ask for a small limit. They'll often extend credit at a smaller level to someone who's just starting to get credit. So you can show that you have some income and that you can make payments if they were willing to give you a $250 credit limit credit card or $500 credit limit credit card. So, you know, starting out with that lower amount, and then as you can show a history of making payments on that credit card, they can see that you're a good risk, and they'll over time increase your limit. And you know, you can also make that request. You can call and say, I would like to see if it's possible to increase the limit on my card. And then by that way, you're also growing your credit and your credit score. You might get 2 credit cards that are at lower amounts. That helps to build a picture for those lenders to see that, okay, here's someone who pays bills in a timely way. We can trust that we're going to get our money back. But hopefully, if you're going to do any of this, you're going to remember what I said in the first video, which is, do not let those credit card bills accumulate and those limit amounts accumulate. Make it a priority that you pay off that credit card bill every month, if at all possible. The only time that something like that you may not be able to, that you should, that it's excusable is if you have like a huge expense because of an emergency of some sort, like car repair. That, you know, $2,500 you just can't come up with. So in that case, you may have to do it where you leave it, you know, take that loan, have a high credit bill, a credit card bill, and then pay it off. And also, to reiterate something that I said in part 1, is that as your credit score goes up, your interest rates can go down, that you will get loans based for. They'll charge you less to take out loans when you have a higher credit score. So, you know, having credit scores are annoying, and small things can affect your credit score. You miss some payments, you're late on some payments, whether it can be utilities, it could be hospital bills, it can be all kinds of things create this aggregate credit score. And so in some ways it's annoying because it can kind of determine your future a little bit, and you feel like it can be unfair. And in some cases it can be unfair, honestly. But just knowing that it's actually a tool, it's a tool that lenders use, but it's a tool for you too. It's a tool for you because in the future you may need to take out a loan. You may want a house loan, you may need a car. And so if you were doing it like it was a video game where you're trying to increase your score, you just have to do all the things in life correctly to keep that score up. And that means paying bills in a timely fashion. If for some reason you can't pay something in a timely fashion, contacting that institution, whether it's a bank, whether it's a credit card, and saying, or whether it's a hospital for a hospital bill, they want to see that you're being proactive, that you're trying to address it, calling them, asking them to work out a payment plan, letting them know that you're having some difficulty. You know, they often will make accommodations for instances. I mean, they don't want to do it all the time, but they will be helpful if you let them know in advance, look, I can't make that minimum. Can I adjust that? Will you allow me this time? In order to keep that credit score high, don't just ignore it, hide from it, be afraid of it. Be really proactive about it, and they'll appreciate that you're trying to do something about it, that you're taking steps towards it, and that you're willing to try to work out a plan with them. Because, you know, in certain economies, if your credit score dives, let's say you've had a foreclosure or a bankruptcy, and hopefully you'll never have that, but people do, and through no fault of their own, if like their industry that they work in just dies. Like let's just say the coal industry in the area that you're at, you know, they've shut the mines or whatever, and there's no other work. You may lose your house, you may declare bankruptcy. You are going to have to build that credit up over time again, and you're going to have to take measures to do it. I'm not an expert on this. I just know that it happens. I've worked in real estate and I've seen it in real life. But try not to ever get in that position. Know that you may, hopefully you won't, but there are steps that you can take, especially if you're proactive, to try to mitigate that. But start with the right attitude when you're just starting out, that yes, you may obtain credit, you may get a line of credit, whether it's through a credit card or a loan, that you're going to be highly responsible. You're going to pay it off every single time, or if it's an emergency and you can't, you're going to pay it off as fast as you can within a few months. That's one way or those several ways to build credit. So anyway, I hope that was helpful. Please give me thumbs up and maybe subscribe if you haven't, and look for part 3. I think it's interesting. It's all about social credit or social currency. That's my own phrase. There's some philosophy that already exists called that, and that's not what I'm talking about. This is social and currency and credit that is going to help you progress through life. So look for that in part 3. Thanks a lot, guys. I'll see you soon. I think I'm going to redo this one.
Sure, I think it's sounding really good.
Yeah, okay. All right. Well, so anyway, now I've lost my train of thought.
No, you're talking about,
Yeah. Yeah.
I
Yeah.
didn't think was there.
Yeah. Yeah.
But honestly, I thought it was sounding fine.
Okay.
I thought it was-
Okay. I stumbled over some words so I didn't like. Well, let's see. Okay, you're right. Right.
Never pay.
Right. Yeah. 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 Yeah.
Here.
Okay. Okay. And so I'll go ahead and continue here.
Yeah.